EV competitors like Ford, GM are scared of Tesla. The votes have been tallied, and Tesla shareholders have approved CEO Elon Musk's controversial $56 billion compensation package. Musk addressed the audience after the results were announced and expressed some of his characteristically optimistic goals for the electric vehicle manufacturer. Tesla has the potential to surpass the valuation of the most valuable company in existence by a factor of 10. If the nodes on the autonomy progression curve are solely plotted and the curve is accepted, it is rapidly approaching unsupervised full self-driving at an exponential rate. It is even more preposterous when one considers the Optimus robot a humanoid robot that is engineered to execute any task that is requested of it. Kevin Paffrath, a financial analyst and YouTuber, provided his perspective on the implications of the vote and Musk's vision for Tesla's future. I think that there is a significant amount of optimism in that, but let's face it, the shareholder vote has now concluded, which is fantastic news. It is a substantial negative catalyst for Tesla. Nevertheless, you are correct. Elon has ambitious goals that will render human drivers obsolete. In all honesty, the capacity of vehicles to operate autonomously is expected to substantially enhance the long-term safety of the entire world. Currently, they are considerably safer on SSD. Consequently, I think that it is a positive development, and we have observed substantial progress in the field of comprehensive self-driving. I am skeptical of the exponential progress that Elon is referring to. The notion that FSD is expanding exponentially is accurate. However, the costs of artificial intelligence are also increasing exponentially, as Jensen Huang demonstrated in one of their artificial intelligence presentations. As a result, advancement proceeds in a series of its curves and ultimately reaches a plateau. The result is that you make less progress at a higher cost. It is delightful to observe shareholders reaffirming their faith in Elon as we continue to advance toward an autonomous future. Moving forward, Elon is correct. I sincerely doubt that it will transpire at the rate he anticipates, nor do I believe that it will be as substantial in the long term. Nevertheless, this is permissible. We can remain optimistic about Tesla's stock because it is likely to maintain the strongest moat in full self-driving for the next 2 to 4 years. It has decreased in magnitude in comparison to its previous size. I would say that we are approximately 18 to 24 months ahead of some of our competitors, including BYD in China and XPeng Motors. Nevertheless, we remain in the lead. Paffrath also elaborated on his stance on Musk's compensation package and the shareholder vote. I executed a minor tax loss harvesting event for my fund PP, which is the pricing power ETF. We sold in mid-March and subsequently repurchased at a price that was similar in mid-April. Nevertheless, we were unable to meet the vote deadline by a single day. However, I did publicly express my endorsement of the vote's passage and stated that I would vote in favor of it if I were given the chance. He provided a more detailed explanation of his support for the compensation package, stating, "The agreement was executed in 2018 and was widely publicized." This was akin to a YOLO call option for Elon to pursue. In all honesty, if that same transaction were to be executed today at those prices, every shareholder would look at it and say, well, at least 70% as we had then, of course, we're going to support it. Undoubtedly, we will provide financial support if you can substantially increase the market capitalization of this stock. Therefore, I believe it is unjust to receive that and then become frustrated with Elon in the short term. I believe it touches on a component of justice. However, we could potentially enter a distinct realm. I think that the actions of the Delaware magistrate did not serve justice. That being said, Tesla must be considered in the long term, as this is my appraisal of it. I do not regard it as a humanoid Optimus program with a budget of $30 to $50 trillion. It's truly delightful. It is akin to the cherry on top. I have been capable of including that in my valuation as a financial advisor. Therefore, I observed data. I examined the data from the second quarter. The early sales data on the bottom suggests that the second quarter will not be as adverse as initially anticipated. I believe it is due to the financing. They ultimately recognized that providing individuals with a lower monthly payment, which was 0.99% APR in May and is now 1.99% in June, indicates their payment sensitivity rather than their price sensitivity. I believe that this will contribute to the significant increase in Tesla shares and the formation of a bottom in the delivery figures. We are already aware that margins have reached their lowest point. Except for Cybertruck, they are the sole automotive company with gross margins exceeding 18%. The majority of companies incur losses when it comes to vehicles, particularly electric vehicles. So in reality, Elon is establishing a bottoming process in the actual production of electric vehicles. Concurrently, he has reinstated the charging team, or at least the majority of them, which is a positive development. All of the other electric vehicle companies that I am researching, including Ford and GM, are afraid. They are decreasing their exposure to electric vehicles. Elon Musk is constructing a substantial electric vehicle moat in the United States for Tesla and its shareholders. Paffrath concluded by acknowledging a potential risk: "I would not own Tesla if China were able to sell EVs here." A stark contrast is apparent when Tesla's market position is assessed in comparison to Toyota. This disparity has been even more pronounced in the past, as Tesla's market capitalization significantly exceeds that of Toyota. Toyota's revenue is still nearly 3 times greater than Tesla's. Despite this, Tesla's valuation as an EV manufacturer does not appear to be consistent with the market's assessment, even though it has higher margins in the automotive sector. The company is anticipated to fulfill a variety of obligations. However, there are apprehensions regarding its capacity to do so shortly, whether it be in 2026, 2027, 2029, or in the future. It is imperative to contrast Tesla's expectations with the assurances that its CEO, Elon Musk, has provided. It seems that there is a substantial disparity between the two. This is not intended to undermine the optimistic outlook of a CEO, which is anticipated. Nevertheless, Tesla's continuous decline during the past 3 years may have rendered Toyota a more advantageous investment from an investment perspective. The differences in the growth trajectories of the two organizations further emphasize this distinction. Tesla's P/E ratio of 1.67 is predicated on a 30% growth rate that will eventually stabilize. In contrast, Toyota's expansion is modest, with an annual rate of approximately 5 to 6%, which is slightly higher than the inflation rate. This growth differential partially explains the valuation disparity and the more pronounced downside risk at Tesla, which has experienced numerous periods of negative growth. It is anticipated that 2024 will be a critical juncture for Tesla. Investors may wish to contemplate hedging strategies as a means of reducing potential hazards. Although this is not personalized advice, it may be feasible to short Tesla as a hedge. This recommendation may appear to be contentious. However, it functions as a macro hedge. An effective strategy could involve shorting Bitcoin, for instance, using a fund such as BITI with which there is no affiliation. This is because Tesla's value tends to decrease when risk assets experience a decline. At present, the French sovereign debt crisis serves as an illustration of a situation in which risk assets, such as Bitcoin, are liquidated, resulting in a decline in their value. Nevertheless, Nvidia has demonstrated improvement, which implies that shorting the entire market as a hedge may not be effective. Consequently, Bitcoin may be the most effective approach to hedging a Tesla position, as it offers an offsetting risk hedge. This approach to hedging is intriguing and distinct from more traditional methods. It serves as a reminder of the necessity of adapting to the present market conditions and the dynamic nature of investment strategies. In summary, the assessment of Tesla's market position, growth prospects, and potential hedging strategies emphasizes the intricacies of investing in high-growth companies with volatile market behaviors. Investors should exercise caution and remain apprised of market trends and hazards. Thanks for watching. Do you like it? Tell us in the comment section below, and don't forget to subscribe to our YouTube channel and hit the bell icon for more interesting and informative videos.